Tesla is one of the most unique and fascinating economic enterprises out there, and it is so fascinating because it participates in one of the oldest industries that exists: innovation and coordinating who controls innovative ideas. More and more Teslas are popping up on the streets. You're probably already hearing sounds like this. But this is a value investment channel. We are listening to the advice of the greats, like Peter Lynch saying, invest in what you know. Tesla is so much more than cars, so much more than batteries, so much more than gigawatt factories. And so what is going on beneath the business hood? We're going to look together at the most recent annual report filed directly with the US Securities and Exchange Commission to use Tesla's own words and fortify our own mental model of what this business is today. Not what your taxi driver is going to tell you, not even what the Wall Street analysts are trying to spin. The actual economics, the actual business priorities laid out in front of us so that we can make sense of it. Put your thinking hat on, better yet find your thinking chair, because we're about to approach this like professional value investors and validate what's the value in Tesla. This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice. It starts with the management's discussion. Our mission is to accelerate the world's transition to sustainable energy. What we're talking about are government tax credits, cash grants, tax abatements, and tax rebates. Let's walk through an example of that with one of their newest businesses at scale, the solar energy business. Then we can step back and look at the strategy of the latest year, solar energy systems table. Every single year, Tesla is accounting $235 million of depreciation. Zooming it back out, we see that Tesla's made about $6.7 billion worth of solar panels. It's accounted a $1.6 billion cost over its entire life. We are the lesser of solar energy systems. That word lesser means that Tesla is a landlord for every single solar panel it creates. And so you build a home, you work with Tesla. The moment that is installed on your roof, you might own your home or your mortgage, but whatever. Even the bank no longer owns your roof because you have signed away the property rights to that structure that is attached to Tesla's technology. Will you eventually pay off your solar panel? Yes, but until you do, and I mean until the last penny is paid off, for accounting purposes at least, which are defining who gets benefits from the government, you own 0% of your solar panel roof. Tesla is essentially the landlord of a bunch of apartment-like assets. Energy generation and storage segment, storage revenue benefits from manufacturing credits earned. Deferred revenue also includes the portion of rebates and incentives received from utility companies, various local and state government agencies, rebates and incentives. It is literally as if they were charging you a 70% rent and then charging the government a 50% rent. This combo means they get to charge you more than the 100% cost of what would be a usual rent. Now, while solar energy systems is not literally the youngest business that Tesla has set up, I'm going to say that as far as I can tell, it is the best balance of young while still being at a scale. I'm looking for that total value of how much they're making off of these solar energy leases. What they've done instead is we are the lesser of certain vehicle and solar energy system arrangements. This includes vehicles and solar energy systems. Tesla breaks it up in two types of leases. I don't think the difference is very meaningful, so let's just add these two numbers together. We're looking at about $5.5 billion in gross lease receivables. If we were to look at just the next 5 years, it would be about $4 billion. Back to the note 2, they call it direct vehicle operating leasing program, $1.86 billion. And so for the purposes of the argument we're trying to make, let's say Tesla is receiving about $2 billion for its leases. Back at the lease receivables table, the actual money that Tesla is expecting customers to pay is 1.6 because it's this number added to this number. And so the difference has to be coming from those financial mechanisms provided by local governments, state governments, utility providers in the case of solar panels, and or the federal government. This is very rough math, but it's in the hundreds of millions. Popping over to the cash flow statement, I believe Tesla actually chooses businesses based on how high of the fraction of revenue they can expect from government incentives is. The more innovative they can be, the more governments are going to step in. Look at the efficiency here. A little bit lower cash flows for investing activities, purchases of solar energy systems. They spent $1 million on it in a year in which they received a huge chunk of this $1.5 billion. Now, stepping back, here we have a table of revenues, just the revenue of Tesla Tesla, broken up to all sorts of different parts of the business. What stands out on this revenue table is that almost all of it is coming from automotive sales, which are not the automotive leasing that we were looking at earlier. The reason I chose to look at automotive leasing is because its new business, its energy generation and storage segment revenue, has a lot more in common with automotive leasing than it does automotive sales. And so looking towards the future, we have now done a little deep dive into the economics of its future focus, this energy generation and storage segment revenue, which has already been larger in terms of revenue than the automotive leasing business. But all that's good and well, that's the future. But right now, today, almost all of its money is coming from automotive sales. This is where the question, what value does Tesla provide, really hits a boiling point in my philosophy. This is something I've thought about a lot, and I'm still probably need a lot more time to think about. So please mention in the comments what your take is on all of this. Tesla is fascinating, and I think there's a lot of room for interpretation. So let's focus on their cash flow statement. I don't think I'm going to be able to parse through the entire thing on this video. Also, I don't think it would be very entertaining to do so, but they spent a couple $100 million on inventory, received a couple $100 million from actual customers here, pretty tiny compared to everything else. All these other things are shifting around prepaid expenses, deferred revenue, investments, income taxes. I think the point I'm trying to make is look at just deferred income taxes. 6.3 billion decrease. That's fine, but it directly contradicts the benefit from income taxes in their income statement, which was also a decrease, but of 5 billion. And the reason is that Tesla is using tax law to make its income statement look very, very nice, but then it's using climate incentive credits to make its cash flow statement look very, very nice. Both these things are true. None of this is inappropriate. If it were inappropriate, it would have been audited already. What I'm saying is that this business is very unique and very difficult to understand the economics of. In my opinion, Tesla's economic value comes from arbitraging the tax code with the real cash flow that can exchange hands between customers and suppliers and a whole supply chain. Tesla doesn't make cars. That's not its economic proposition. It makes cars as a side effect of doing something else. And I think lots of people understand this on an intuitive notion, but few of us can actually follow Peter Lynch's advice and say that we understand what we own, because this 78 billion is not how much money customers paid for Tesla vehicles. It is a mosaic of agreements with local, state, federal governments and individual customers. The aggregate estimate of how much the cars Tesla pushed out of its factory in this year should cost, based on Tesla asking 5 people every time they sell one car. And if you're a customer that has bought a Tesla at any point, before you received the keys to that car, Tesla had multiple negotiations, and I genuinely don't know how to tell you how many in your specific case, because it's very geography dependent. In some markets, Tesla might have only spoken to the federal government about it, then you. In other markets, probably California, the biggest example, Tesla has been for decades coordinating dozens of overlapping authorities in order to get them all to have an estimate of how much that Tesla car should be worth. That is not the sticker price you see on the car. And whereas a traditional car company like Ford or General Motors, they wouldn't quite do this, but they're a lot closer to just saying, this is what the car is worth. That is not at all how Tesla makes profit. Tesla makes profit by being the middleman between all these different parts of the supply chain and the regulators and you. It is like a 5, 6, 7, 8-way middleman that generates profit by collecting fees from this middleman service. For this reason, before Tesla can get around to servicing its stockholders, it needs to satisfy every single one of those counterparties that it's a middleman for. Tesla's value is to get people that would normally never talk to each other to talk to each other long enough to make new things happen. We could make a whole nother video getting into the accounting and the details of this, but the aggregate value of all that middleman shenanigans is very much related in my mind to additional paid-in capital right here, their definition of what those words are. And since according to current international financial reporting standards, there is nothing wrong or incorrect about calling that additional paid-in capital, then Tesla is not doing anything wrong. I don't like how they present themselves as this product-focused company when they're the furthest thing possible from a product-focused company. I mean, I know they spend a lot of their day-to-day working on products and creating better versions of products, but not a single part of their economic proposition depends on those products getting sold. Tesla could literally not sell a single car and have the exact same shareholders' equity. Its income statement would look ridiculously different if they didn't sell a single car. But what does that matter to you as an investor? Because the income statement is pure fantasy land in terms of your investment. The only thing that matters is what is left after every single regulator, every single supply chain participant, every single dealership that is selling these cars, every single battery station, every single landlord of a parking lot where their battery station is being built, and it goes on and on and on. All these different constituent stakeholders get to safely try to prepare for the future and pay Tesla for the service of helping them prepare for the future in a way that is a lot safer than if they were innovating on their own. This has been going on since as far back as like the Roman economy definitely had a lot of this going on. The role of innovation and innovators has always been risky, but without them, new products and services would never be created, which is a terrible, terrible tragedy. And so typically the only person that wants risk to be taking place when the payoff is uncertain or probably stupid even, are the government institutions. That's what they mean by tax rebates and incentives programs, all these financial mechanisms, blah, blah, blah. Unless someone that has the common interest of everyone in mind encourages innovative risk-taking tends to never happen. Humans are scared animals, but in the modern age where there's a very prominent desire to have innovation happening by the private sector, you get the venture capital industry and companies like Tesla. Tesla is a wholesale venture capital firm through and through. Instead of outsourcing its ventures, it manufactures them from the ground up in-house. Elon Musk has said multiple times that the long-term vision is not vehicles, it is energy generation. They're already on that path forward. But basically any innovative venture that can connect to the usage of electricity. But if Tesla marketed itself as a wholesale venture capital firm, most of its current investors would not be at all interested. Electric vehicle company or battery company of the future, like those are very different levels of sexiness when we're talking about potential investment proposals. It has an income statement that takes quite a bit of digging to realize isn't saying anything related to that. It has all sorts of accounts that are, I would argue, designed to make it pass the sniff test as a product and services company. But Tesla is a financial company through and through. All the economic risks that exist when you as an investor invest in a venture capital firm, not something I would recommend personally that you do. All of those same economic risks exist as an investor in Tesla. Tesla is an outrageously successful venture capital firm. I genuinely think they have cracked the wholesale element of it, which is not an easy thing to do. The risk is the income statement will not be able to look how it looks right now unless there's new ideas. Tesla does not care about selling products. Tesla cares about selling innovation.